Welcome to the webinar. We'll get started shortly. Before we begin, here's how to earn CPE credit. Unlike traditional CPE webinars, there are no polling questions or attendance checks during the presentation. Instead, you will demonstrate your knowledge by taking a brief multiple-choice quiz in the Earmark app. Search for the free Earmark app from the App Store or Google Play Store, or scan the QR code on the screen. Open the app and create an account. Be sure to use a valid email address because we'll email you your CPE certificates. From the home screen, scroll down to find the course. You can also tap the magnifying glass icon to search for the course. Tap on the course artwork, then the Enroll button. On the Course tab, you'll find the recording and quiz questions. If you don't see the quiz yet, don't worry. We'll email you when the quiz is available. Complete the quiz to earn your CPE certificate. If you have questions or need help, email us anytime at support@earmarkcpe.com. Now, on to the webinar.
Hello, everyone. Thanks for joining us today or watching this on demand, and welcome to today's webinar, A Guide to Beneficial Ownership Information Reporting. And I'm going to introduce you to your host of today's webinar, James Gilmer from Harbor Compliance. And James, please take it away.
Thank you very much, Zach, and good afternoon, good morning, or whatever time of day you happen to be watching this in. Really appreciate your attendance and your attention on a very exciting topic, which is the Corporate Transparency Act and Beneficial Ownership Information Reporting. As Zach said, my name is James Gilmer. I am Strategic Partnership Manager at Harbor Compliance. Harbor Compliance is a multi-state provider of choice for over 40,000 clients, as well as CPA, accounting, and law firms across the country. We're a nationwide provider of registered agent, business registration, and licensing services and software. We also extensively support nonprofit organizations, primarily through Labyrinth, our nonprofit brand. So today we're going to talk about the Corporate Transparency Act and the associated beneficial ownership reporting requirement. I want to encourage the audience to ask questions. This is a new topic, and many people, including yourselves, might be learning about this for the first time. So more than ever, there is no such thing as a dumb question. I want to create an open forum for that discussion. So if you do have questions, don't be shy, put them in the chat, and I'll do my best either to address them during the presentation or at the end. We should have some time to go through your questions and make sure that they get answered. Before we get started as well, I do want to say that many accounting firms, many insurance companies, many professional associations have developed their own guidance with respect to this requirement and how you should approach your client conversations or your own business. And we're not here to replace or supplant any guidance or advice that you might have received, whether that be from the AICPA or your own legal or compliance function. That's not what we're here to do. What we are here to do is provide education from our own perspective, about 5, almost 6 months into the process or into the requirement. And we play a unique role in the process, working with businesses across the United States, their partner legal and accounting firms, to understand the need and the complexity. And of course, we do this work, and we work with businesses that have to report under this requirement. We work with FinCEN. And so our hope is really that you come away with a greater understanding of the complexities associated with the reporting requirement and have some more education so that you're better prepared to answer your clients' questions and concerns if and when they come up. So with that intro aside, let's talk about today's agenda. So today we'll be covering beneficial ownership information reporting requirements at a high level. So what are they? Why maintaining BOI should be a priority. What does it take to file a beneficial ownership information report, and how to manage and simplify the BOI reporting process. So the presentation should be around 40 to 45 minutes, followed by a 10-minute Q&A period. I'll see how well I do on my timing, but this session is being recorded so that you'll have the ability to look back, and I'll have my contact information at the end. So if you do have questions that you're not able to ask at the moment, you'll be able to reach out to me anytime. So I owe the audience a bit of an apology for all the acronyms that you'll be hearing in today's presentation. The federal government loves to use acronyms. You'll hear a lot of them interspersed in today's presentation. So I'll define each as we go to make this as easy to follow as possible, but I want to just establish a few right out of the gate. CTA, this stands for the Corporate Transparency Act. This is a law that was enacted by Congress on January 1st, 2021. And we'll also talk about BOI, which stands for Beneficial Ownership Information. And the whole reason that today BOI reporting is now required is to accomplish the objectives of the law, the Corporate Transparency Act. So here's the background that you need to know about the CTA. The CTA was passed as part of the National Defense Authorization Act, and its primary objective is to prevent money laundering, terrorism financing, um, all these illicit and very horrible financial activities that do take place within the world. And the way that this will happen is by promoting transparency within corporate structures. We all probably are familiar with a shell company or anonymous entities. That's how a lot of these activities have taken place historically in the United States. And whereas the rest of the world do have mechanisms to identify the people behind those entities, the United States is catching up in that respect. We'll talk a little bit more about that later on. But how does this work, right? So how does the CTA work in practice? Well, by requiring most organizations to report information about the individuals who control their operations to the federal government. And the federal government will be building a database of those people. These individuals are known as beneficial owners, and hence by reporting this information to the government, you arrive at the term beneficial ownership information reporting. Now, by revealing the individuals who benefit from a business, it becomes more challenging for criminals to operate that business anonymously. You're familiar with the saying, follow the money, right? Well, BOI reporting allows the federal government to more easily follow the money, identify bad actors behind complex corporate structures, and facilitate in those investigations and enforcement where applicable. And of course, for legitimate businesses, the vast majority of businesses in the country, beneficial ownership and information reporting promotes a more transparent and trustworthy business climate. It helps prevent unfair competition from entities engaging in illicit activities, creating a more level playing field for all businesses. So what is a beneficial owner? And the text on this slide, it's on our slide, but you can also find this directly on the FinCEN website. That's FINCEN.gov, FinCEN.gov. And at a high level, a beneficial owner is a natural person, so a flesh and blood human being that is either somebody with substantial direct or indirect control of a company, or direct or indirect ownership in a company. So ownership is more or less the more clear of the two. So an equity stake of some kind or membership stake, and as long as that is more than 25% of the reporting entity, then generally speaking, that person would be an owner of that entity, or beneficial owner rather of that entity, and may need to be submitted on the entity's beneficial owner information report. The other piece of this is control. And so an individual with control of an entity may be an individual with ownership, but it doesn't have to be. And you can see here, FinCEN defines this as an individual who's a senior officer of the reporting company with some examples: president, CEO, general counsel, and so on, and has certain authority over the appointment of other senior officers, directing or determining the influence over decisions, and there's some catch-all provisions as well. And so this is where, from our experience, a lot of our client organizations will spend time in this area, understanding subjectively who the folks with control are within their organization. I will actually, just to go back to this slide, there's one more thought on this. I often get questions from clients whether a beneficial owner is the same thing as an LLC member. And it's not. They're not synonymous. These are not necessarily the same person. But why is that? Think about an LLC, which can be owned by another entity, right? So the member of that LLC is another corporation or an LLC. that is not a natural person. So in this case, it's not the same thing. Certainly within certain organizations they might be, but it would be important to refer to them as beneficial owners in the appropriate context, and not thinking that LLC members are universally beneficial owners. And the beneficial owner is not the same as the company applicant. We'll talk about a company applicant later, which is generally the person who forms the entity or directs the entity to be formed. These are not the same person either. More on that later. So it is very important to have just this concept of an owner firmly formed in your brain, and you understand what that is if it comes up in your client conversations. Now, we already alluded to this, but what is the purpose of beneficial ownership information reporting? And I've got a quote directly on the screen from FinCEN. FinCEN is another acronym, you guessed it. Stands for the Financial Crimes Enforcement Network. And FinCEN is a division of the United States Department of the Treasury. And FinCEN is the agency that has issued much of the educational information about this requirement. It developed the filing process and portal, and oversees enforcement. I've got a quote from FinCEN on the screen that describes how BOI helps it accomplish its purposes. BOI can provide essential information to law enforcement, intelligence, and national security professionals as they work to protect the United States from bad actors who exploit anonymous shell companies to engage in money laundering, corruption, sanctions and tax evasion, drug trafficking, fraud, and a host of other criminal offenses with impunity, while legitimate businesses suffer from their misdeeds. So who better to hear it from than FinCEN directly? And so 5 months in, we are very well into how this plays out. Now, recognizing that FinCEN has been the primary body putting out public education, we have some thoughts on that as well. And this comes from our conversations with accounting firms, attorneys, law firms, et cetera, across the country. And there's a couple of trends that stand out in their responses. We talk to a lot of business owners as well. You know, generally speaking, there's a lot of incomplete education, or just general lack of awareness about the requirement, especially with business owners. And so FinCEN has put out information. Some Secretary of States, but not all, have done their part to educate business owners about this requirement. We do our part as well. And the ask for the listeners on today's call is that you help educate your clients as well, because many have not heard about this. We'll talk about penalties and consequences for not reporting later. But the business owners, they don't have awareness about the requirement, and they do expect their accountants or their attorneys to notify them and suggest options for compliance. Now, of course, when we talk with a lot of CPA and accounting firms and law firms, they're generally hesitant to complete these filings on behalf of their clients, whether that's an internal policy or something to do with their insurance policy or guidance they may have received from an association they're part of, or because the reports themselves contain a lot of PII, personally identifiable information, and they don't necessarily have or want to invest in a way to collect and store that sensitive data securely. So that's a big factor as well. And as a result, they are exploring partnering with third-party providers just like Harbor Compliance to handle the filings for their clients. So again, just coming back to the point here, everybody plays a role in educating their clients. And certainly if your firm needs help with that, we would be more than happy to connect after this presentation and discuss ways to accomplish that. Now let's talk about one of the biggest FAQs that you'll hear, right? Do these requirements apply to us? And by us, I mean I'm the business or from the organizations that you might be working with, your clients. Do they apply to us? Well, the general answer is yes. In the lead up to the filing window that opened back on January 1st, 2024, FinCEN provided very telling estimates of the number of organizations that will be impacted. So setting aside some exceptions, there are some exceptions, and we'll talk about that for sole proprietorships, estate plan trusts, and some other types of entities. FinCEN estimated that roughly 32 million reporting companies existed as of the first of this year, and that every year, including this one, that another roughly 5 million new reporting companies would be registered this year and each year after that, right? Entities are created all the time, and it's just it's a massive number of entities. Just by looking at public data, that's roughly 97% of all organizations that have a business registration in the United States. So the numbers are really overwhelming. These FinCEN estimates as the numerator over top of all of the entities that exist, it's the vast majority of businesses that have to report BOI. It's easier to think about everybody who does have to report this versus trying to look at the limited set of exemptions as far as who would not have to require or who would be required to file. But they are important to understand. There are 23 categories of exemptions from the CTA. Many are very narrow, right? So nonprofits that have federal tax exemptions, other types of entities that have already submitted substantial information about their ownership to the government, for example, insurance providers and banks. There's already an oversight mechanism over a lot of these types of entities, and therefore the beneficial ownership component would not apply to them. These are probably a very small percentage of your clients, or probably don't describe you if you're an organization on this call. The one that is, in our experience, already the most common is what's called the large operating company category. This is the one that has probably the most broad potential for businesses to fall under. And so entities or the subsidiaries of entities that meet all three of the criteria on your screen would be exempt. So they have 20 plus full-time employees in the United States, have an operating presence at a physical office in the United States, and reported over 5 million in gross receipts on its taxes last year. So there are a substantial number of businesses that would meet that exemption, but outside of that major category and some of the other more narrow exemptions, most businesses should be prepared to meet this requirement. So in preparation to meet those requirements, and now we're going to be talking about the 97%, right? These are not the 3% of entities that don't fall into one of those buckets. Owners need to know when the reports are due. And so we've got a helpful schedule here on your screen. If the business is one of the roughly 32 million reporting companies that FinCEN estimated to be in existence as of the end of 2023, they're slightly in luck, right? They have still some time before the report is due, at least as of this presentation, which is May 23rd, 2024. Those reports will not be due until January 1st, 2025. So they have the full calendar year of 2024 to submit their report. Now, as we'll discuss later in the presentation, it may be in their best interest to report BOI sooner rather than later, but we'll cover that in a bit. That's the 32 million entities that already exist. Now let's talk about the 5 million that FinCEN estimates will be created here in 2024. If the entity was created in the United States during this current calendar year, 2024, at this point in the year, the reporting deadline may have already passed. FinCEN's deadline is 90 days from the date of formation or registration, so the date that the Secretary of State of that entity's domicile records the entity. So entities that were formed in January, even many that are formed in February, are either overdue or coming very close to being up against their 90-day FinCEN reporting deadline. So it's very important for those entities to submit their reports. And of course, any entities that have been filed at any point in 2024, they're on the clock. And so if you do work with any type of small businesses or entrepreneurs that are setting up entities, perhaps you've got real estate investment companies or larger organizations that are routinely setting up new LLCs or corporations for whatever work they will be doing, This is a very important timetable to understand and have a solution at the ready for. Now, this is in 2024. As you can see, beginning in 2025, that deadline goes down even less, 30 days. And so FinCEN is generally expecting that businesses and their partner law firms and service companies who are creating the company will have the process nailed down, and it becomes an even tighter reporting window. That does create some practical difficulties. We understand that many entities may not even have their federal EIN inside of the 30-day window because the owners are international or the principal place of business is international. And there's some logistical challenges with that. Um, but as it stands, this is the requirement. There's no real way around it at this time. Certainly, it's something that we are keeping our eyes on. But as it stands, businesses need to be ready to file within 90 days this year and then 30 days next year. The other thing that I want to talk about is the beneficial ownership report isn't just a one-time filing. It's not just a one-time requirement. BOI reporting allows the federal government, remember this, to more easily follow the money and identify bad actors behind complex corporate structures. That's only possible if the information that FinCEN has on file is up to date. And that means any BOI reported to FinCEN must be updated as soon as it changes. Otherwise, the federal database, or the information on file, would quickly become outdated and no longer useful in the purpose it was contemplated for. So accordingly, FinCEN has additional report types, not only to collect that initial information, but updates and corrections as well. So I've got these on this screen. Updated reports are used to notify FinCEN of any changes to reported information about the entity or its owners. For example, making changes to the entity's name, registering a DBA, updating its address. Maybe there is a change in the beneficial owners who, by the way, remember, are not just the owners, but those with control of the organization, and any of the information about those people, their ID, their residential address, all of these in all these data points, right? Any change would trigger the need for that entity to submit an updated BOI report within 30 days of that change. So you can imagine needing a mechanism or just being able to track those changes within a given organization and then being able to file that report on time. That in and of itself is going to be a challenge. It already is for many entities that have already reported. Updated reports are also used to notify FinCEN when an entity's exemption eligibility has changed. For example, consider a nonprofit corporation formed this year that intends to apply for its federal tax exemption. Well, for most organizations that file for income tax exemption with the IRS, that process takes longer than 90 days, which means the nonprofit may need to report BOI to FinCEN until its federal tax exemption is granted. Of course, when the tax exempt designation is granted by the IRS, the nonprofit would file an updated report to FinCEN indicating that it's no longer required to maintain up-to-date BOI. And finally, corrected reports. FinCEN understands that honest mistakes in reporting will happen, right? We're all human. The agency, of course, does need those to be cleaned up. So they have a mechanism for that. They offer corrected reports to fix any inaccuracies in previously submitted BOI filings, whether that's a misspelling or you grab a wrong address from someplace. It happens, but the obligation is on the entity to go back and correct that. And just like with the updated reports, entities have 30 days to submit a corrected BOI report from the date the entity becomes aware of the inaccuracy. So coming back to the conception that BOI is a one-time obligation. It's really a misconception, right? Technically speaking, it is possible, theoretically, for a business only to ever have to report BOI once, and that none of that changes. It never makes a mistake. Nothing ever changes over its entire life cycle. None of that underlying information would change and therefore trigger an updated report. But practically speaking, it's probably not the case, right? At some point, the entity will have one, or if not, for more complex organizations, many changes over its entire life cycle. So we need to think about this less like a single filing and more about how does the business maintain all of this data? How does it ensure that those changes to its information are timely collected and then reported to FinCEN on that rolling basis as it creates new entities that it hits that 90 and then 30-day table. It becomes a more of a managed process, and that's something that we help with. But it is important for this group to understand all of the, if you liken it to an iceberg, the below the surface type work that goes into BOI reporting. So why should beneficial ownership reporting be a priority for every business, right? So does it apply to me? Probably. Why should I care, right? That's the question that your clients may be asking. Well, first and foremost, reporting under the Corporate Transparency Act is now the law. That should be that should be the end of the discussion. Of course, if not, there's a public benefit component to that, right? The United States is simply catching up to other countries in identifying the legitimate owners of business entities and cracking down on truly horrible crimes. Um, and just as a business files its tax returns, it maintains licenses for its industry, beneficial ownership information reporting is another best practice in demonstrating good corporate citizenship. As we mentioned earlier, it's a way to separate out the legitimate businesses, the vast majority of businesses in the country, versus those that are not. And so it should be a badge of honor for the organizations that operate in the United States that want to be in a good business climate. Um, so it's an additional responsibility, but it's for important reasons. And I would definitely stress that with your clients. The gap is really around education, and so that's where we'll again help help us help FinCEN communicate the importance of this to your clients, and everybody benefits. Now, beyond these reasons, which are somewhat academic, if those aren't enough to convince you, there are still fines and penalties associated with the CTA that your clients will prefer to avoid. So let's dig into what those are. Um, this is not an optional requirement, right? Now that we're 6 months into 2024, we are well into the period where some businesses that have not reported timely could be exposed to significant penalties, and they certainly are significant. And FinCEN has the enforcement ability. Um, we haven't necessarily seen that play out fully just yet, but here are the penalties, right? There are two distinct violations. One is willful provision or attempt to provide false information in a BOI report. The second is willful failure to file a complete updated BOI report. And in either case, the business may face civil or criminal penalties. So as far as civil penalties are concerned, violations can result in fines up to $591 per day, capped at just over $11,000 per violation. And with respect to criminal penalties, up to 2 years of imprisonment may result. And so just knowledge of these penalties alone will inevitably move BOI reporting up to the top of a lot of company priority lists. It's definitely important to understand that these penalties are out there. And by the way, these penalties are not an either or scenario. FinCEN does have the ability to enforce both civil and criminal penalties simultaneously. Now, we don't like to focus on doom and gloom and the negative, right? The penalties exist just like many other types of regulatory penalties exist, whether that's a tax penalty, penalties for a Secretary of State, registration lapsing or a license lapsing. So in that way, it's not terribly different, but we would like to focus more on helping your clients be proactive, right? What are some common sense approaches to avoid penalties? Well, there's two approaches, and we've kind of seen this play out and gotten this understanding from discussing with our clients, right? So the most common sense practical approach for a business, maybe the most comprehensive way to achieve compliance is to report BOI for all the entities that could reasonably be impacted by the new requirements. By taking a proactive approach, business owners will avoid paralysis by analysis and put the requirement behind them as fast as possible. And this would especially apply or mean any entities formed after the first of this year, which are on that 90-day clock. What this also helps avoid is having to complete the report towards the end of 2024. And we are definitely expecting FinCEN to be busiest in late quarter three, quarter four of 2024. We think FinCEN is going to be receiving an enormous amount of information from millions of users, millions of businesses in a relatively short amount of time. And it remains to be seen if FinCEN's system and staff will be able to accommodate that volume. So if worse comes to worst and that system can't keep up and it prevents businesses from filing, there's no guarantee the deadline will be extended, and you may have some unreported ownership out there, and that's not a great feeling. And certainly we won't want to speculate as to what would happen, but it could create some exposure for the business. Um, you know, on one hand, by doing that, by reporting now and keeping the information up to date, the likelihood of that business facing a penalty is largely eliminated. And that's because there's no filing violations for entities that report even when they're not required to. And of course, if in the future the owner determines that the entity is exempt from having to report BOI, again, there's a mechanism. A corrected or updated report can be submitted to eliminate the need to maintain that information going forward. That's one approach. On the other hand, business owners can and do, they have the option to do this. They can closely scrutinize the exemption criteria, understanding which of their entities would have to report. And then of course, they'll still have to go through the exercise of defining who the beneficial owners are for each and every one of those entities. And we'll talk about that piece in a minute. But the business may choose to enlist the help of an attorney to make a legal determination on whether or not a given entity needs to report. And this is a very turnkey, hand in glove kind of approach that ensures BOI is reported for only the entities that are absolutely required to provide it. The trade-off for that is not every business will want to spend the money and time and have an attorney review their exemption eligibility. Um, and so that might not be ideal for business owners who just want to put the requirement behind them or don't have the budget to do that. Not to mention that a newly formed business will only have 90 days to file, going down to 30, and they may just not have time to wait for a full legal determination. So at this point, I am obligated to say we are not a law firm. We do not provide legal advice. It's disclaimed everywhere. And certainly we're not in a position to, tell you or advise a given client how they should proceed. Certainly it should be up to them and their legal counsel to make that decision. But these are the two general approaches that we see businesses take with the ownership requirements. And really it's a trade-off. The organization has to weigh the cost of reporting BOI right now with the cost of scrutinizing how the requirements impact their business and the potential risks of delaying that decision. So regardless of who the organization is or the philosophy, we just encourage businesses to be proactive. Start the conversation internally, leverage legal counsel, as appropriate, and do what's necessary to put the requirement and the risk of those missed deadlines and penalties behind them. Nobody wants to have the conversation about penalties and enforcement. Just do your best to stay ahead. So compliance is a best practice, and we like to reinforce this message with our own clients, and it's something that, again, just in your role in helping educate clients, this will answer some of the questions about why. Right, maintaining legal compliance is not only the law, but it is a best practice for businesses of all kinds. Just like how a business would file an annual report with the state, it files its tax returns, obtains and maintains its business licenses. BOI reporting is now the reality of operating a compliant business in the United States. So businesses that do want to take the first step towards achieving compliance should share what they learned today with your leadership teams, your executive teams, of course, with if you are part of a CPA firm or some other business that supports other businesses. Remember, it's it's a fact that many business owners are not yet fully aware of this, or they might not know the risks of failing to report. And so we don't expect anybody to come out of this call being experts on the CTA. You might not need to be or want to be, but your clients need to know. They need to know what the requirement is and how it impacts them. So hopefully we believe this presentation will give you enough high-level information to be able to direct them to find a solution, whether that's through us or independently. And if you are like many of the firms we support, we'd be more than happy to collaborate with you on educating your firm, educating your clients in a similar format to this one. So regardless of your role, your firm's position on offering a solution, but take the initiative, start the conversation within your organization, and we just encourage everyone to follow these best practices and become an advocate for prioritizing compliance. So what does it take? I'm sure you're all just dying to know, James, what does it take to actually file one of these reports? Well, we like to think about it in 4 phases: research, apply, monitor, and maintain. So let's start with research. Research can be broken down into 3 discrete steps. First is determining the exemption requirements, right? So we've gone through, most entities will have to report. There is a large operating company exemption. The vast majority of other businesses and legal entities will have to report. Should be fairly straightforward for most organizations. The second is determining the beneficial owners. This is where it gets more complicated, especially if there are multiple layers of subsidiaries. So for example, an LLC that's owned by an LLC with another entity at the top of the stack. That is where, for more complex organizational structures, FinCEN has put out some very helpful information. They have a small business guide, which I'd encourage um, everybody to access and read. It's very helpful, and that will give you a lot of detail on how to calculate ownership. But this is also the area, as I mentioned earlier, where the business may want to involve its legal counsel to help understand who those owners are, who its controlling individuals are. And then the third step under research is gathering the information um, about the company and the individuals. So let's dive into that. Broadly speaking, there are 2 types of information that every organization must report on a given BOI report: company and individual, right? So information about the reporting company are fairly straightforward. It's honestly things you might have or know what they are. There's no curveballs with this, right? So the legal name, the jurisdiction, so the state, for instance, that it's formed in, the date that it was formed in, the type of entity, LLC, corporation, what have you, its address, its tax ID, typically the EIN, and then you get into the beneficial owners and applicants. And I will group those as individuals. There's 2 types. And for those individuals, you'll need to report the name, date of birth, residential address, some form of photo ID, which would be either a United States driver's license or passport, or if it is a foreign owner, then it would have to be a foreign passport. Or in lieu of all this information, you can report that individual's FinCEN ID. The FinCEN ID is something that any person can obtain. They'll have to submit these 4 items: name, date of birth, address, and ID. And that will greatly facilitate the process of reporting, especially if that individual is associated with many reports. So for example, they're the beneficial owner of many entities, or they're the company applicant for many entities. The FinCEN ID is a helpful way to reduce the data that needs to be input on any given report. I will just say the FinCEN ID has to be maintained, right? So if any of these data points change for that person, the person who has the ID is responsible for logging in and updating their ID record. It's not a loophole to get out of reporting changing or changes to the address or anything else, right? So at this point, I do want to provide another definition. This is the company applicant, right? So inside this individuals tab, you have two different types of people. The beneficial owners that we talked about, that's the natural person with direct or indirect ownership or substantial control over the entity. Company applicants are the natural persons who create or cause the entity to be created. And this is, in other words, generally the person who files the incorporation paperwork with the Secretary of State, and if there's a second person who directed them to do that. Company applicants are only required to be reported for entities formed here in 2024 and beyond. That's very important. The FinCEN is not asking for companies to go back and figure out who filed a corporate document back in 1996 or anything historic. It's 2024 and beyond. But regardless, on any given FinCEN report, the business will be submitting at least one beneficial owner and at least one, but potentially up to two company applicants. So there's a lot of individual information that gets reported with this, and ultimately businesses will need a system to collect and aggregate and maintain these data points over time, and I'll talk about that in just a minute. But again, the key to remember here, both what FinCEN requires and any information that the company reports, all of these things may also change over time. So not only are we talking about company data, we're talking about data for, at least two, maybe more, many more individuals. All of that data needs to be collected and maintained and then submitted if there's a change. The other factor here is when it comes to this data over here for the individuals, the owners and applicants, a lot of it's straightforward, but it also requires personal identifiable information, PII. And so that's any information connected to a specific person that can be used to uncover that individual's identity. So full name, photo ID, and so on. And it's very important that any system or any process that is designed to submit these reports has the right security protocols to prevent any sort of sensitive information from falling into the wrong hands. And so this is where when we talk about a lot of organizations and professional services firms who are looking at this requirement and discussing, do we want to offer this? Do we want to help our clients with this? Many just lack the technology or the desire to collect, store, and transmit this data securely and systematically. And so that's where any organization that is looking to do this but lacks that technology, there is a case to be made that a third-party vendor with the proper security protocols already in place may be the best solution. So the next step is to apply, right? You've aggregated all this data. Now you have to get it to FinCEN. FinCEN has a public online filing portal. It's called BOSS, B-O-S-S. It stands for the Business Operating Support System, or Beneficial Ownership Support System, excuse me. And it's used to transmit any initial updated and corrected BOI reports. It is theoretically a 24/7 application that allows you, the client, any entity, right, the general public, to submit reports directly to FinCEN. In our experience, it's a fairly usable system. They did all right. We work with a lot of government websites. It's a usable system. But we have seen some issues early on. For example, the system does tend to time out if a report isn't completed within a certain time frame. The FinCEN report has 58 questions on it. So if you don't have all the information, you can imagine that getting to the middle of a 58 question form, the system timing out, and then you have to go back and collect information and having to re-enter all that data. It can be pretty frustrating, especially if you're doing a lot of these. The second point is it's nearly 60 data points for each report. For one entity, that very well may be a manageable amount of data. But when you factor in organizations that have multiple entities or firms that have hundreds or thousands of client entities, and then you think about all the updates and corrections that have to get submitted over time, using FinCEN's BOSS system to process filings manually, it simply won't just won't cut it. There's too much work to be done, and so that's where we view applying as more. It's not just a transaction. There's more to it. So you have to consider securely storing the reported information, understanding that changes to that data will trigger future reports. So in an ideal scenario, you'll have a secure web-based application that actually stores the data so that you don't need to worry about starting every corrected or updated report from scratch. And the system that notifies or reminds users to provide updates to that information. And when it changes, they only update the one or two things that have changed versus entering everything anew. So that's how we view it. Um, and then just in terms of getting the work done, like I said, doing a single FinCEN report, it's doable. It won't take all that long, but transmitting that data in high volume, it is possible. FinCEN has an API, and so instead of using the BOSS system to file individual reports manually, third-party providers can get access to pass all of that data directly into the FinCEN system. And so this is another publicly available capability. However, it does take technical know-how and an investment in that automation that a lot of firms, even service providers, aren't in a position to make. And so anybody that's looking to outsource and handle BOI reports at scale should know to ask that question of a provider. Monitoring changes to that reporting information is also vital. As we mentioned, updates and corrections are due within 30 days of that underlying change event. And so your clients may be asking, well, what triggers the update? What's the simple answer? Anything that was reported previously, if that changes, it needs to be submitted to FinCEN. So any change in address, name, ownership, registered DBA for the beneficial owners, any changes in residential address or new form ID when the previous ID may expire, all this needs to be submitted. Now, to that end, the end business is generally responsible for tracking these changes independently and then reporting to FinCEN. This is another area of complexity that businesses might not have, natively, but it is something that can be solved for. Many outsourced providers will send automatic reminders to update that information and have a mechanism to file with FinCEN shortly thereafter. And so beyond just monitoring the changes to data, there is a level of maintenance, right? So you'll need to monitor the reporting requirement itself. We often see government forms and information required change over time. So even this presentation today in May 2024 may look very different in 6 months or a year or longer. And it's something that we're very plugged into. Like we said, we're in contact with FinCEN and we're looking at the changes to understand them. You may also have heard about the challenge in Alabama about the requirement where the district court found this requirement unconstitutional. This was a case brought by the National Small Business Association. It is still, or it is currently being appealed, but the district court's opinion only applies to the plaintiffs in that case. And so everybody else, the requirement is alive and well, so to speak. And when you think about new entities that have a 90-day window to file, going down to 30, the court system will take likely a good bit of time to play out. And so we encourage businesses to be proactive with respect to the reporting um, under the requirement as it currently stands. Certainly, it could change, but with some unknowns around the enforcement and the penalties, it generally is something that businesses should look at handling just to get it off their plate and avoid those potential challenges. We are also seeing similar requirements proliferate at the state level. So last December, New York Governor Hochul signed the LLC Transparency Act, and there's going to be a new LLC reporting requirement kicking in, I believe, in December of 2024. And we're also aware of other state transparency initiatives in California and Maryland. And, put together, this is really signaling, we think, a trend towards state-driven transparency again, to assist in bringing the United States more into line with what other countries have with respect to business entity transparency requirements. So if your organization doesn't have a plan yet, there will be this requirement and many more likely to be coming down the pike. And so we recommend having a conversation about what it takes to maintain and manage compliance. And so these are the things you should think about with your leadership team: the time it takes to monitor the changes, change and the requirements, having secure storage for the owners and company applicant PII, tracking and storage for your FinCEN IDs, making sure that any new entities that are created are hitting those initial deadlines, the direct time and effort it takes to prepare and submit those ongoing reports, and of course, keeping an eye on any legislative and administrative changes. So there's a lot that goes into an ideal solution. In terms of where your organization stands, hopefully this gives you enough initial information to evaluate your capabilities or your desire to offer this. But certainly, if you come away with anything, again, it all comes back to education. So hopefully you're leaving this session. We are almost at time with some more information about the requirement, its importance, and that you'll be able to at least answer some initial client questions and be able to point them in the direction of a solution. So at this point, I do want to thank you for your time and attention. I will put my information here on the screen. You've got my email address. If you do have any questions today, tomorrow, or in the future, please don't hesitate to reach out to me. I would be more than happy to speak with you or get back to you or have a member of my team do so. And gosh, I guess I wasn't looking at the comments rolling in during the presentation. We got a bunch. So thank you to everybody who did ask questions. I'm going to do my best to go through these. Like I said, if I can't get to everybody, we'll do our best to answer you. All right. So does a nonprofit have to report? We did discuss this. Tax exempt entities, so organizations that have a 501c exemption, generally do not have to report BOI. Newly created nonprofit corporations, so an entity that was just formed with the Secretary of State and has yet to get its federal exemption, may need to report, then subsequently update FinCEN. Great question. Similar question, is there an exemption that an exempt organization must complete and submit? No, generally speaking, if it's exempt from the outset, there's no filing requirement. If we have previously reported but now qualify for the large OPCO category, do we stop reporting? This is a great question. Thank you for that. FinCEN does have a mechanism for that. So an entity that reports and then later discovers that it becomes exempt would have to submit an update to FinCEN, tell FinCEN that it's exempt, and then that would end the reporting obligation. What else do we have here? These are great questions. I'm glad y'all are putting these in here. Okay, if a deadline may differ from state to state, that's a great question. This is not a state requirement. The Corporate Transparency Act, the beneficial ownership reporting requirement, this is a federal requirement. So there is no difference in deadline per state. This is not like what you cite here, which is an annual return for an existing Massachusetts entity. So yes, those tax returns, those Secretary of State annual reports, those will all be state specific. That's another area of complexity that we can help you with if you want to talk about that. But no, we are talking about FinCEN. This is one deadline for all businesses. And I think you'll get the slides after this presentation. You'll be able to review the recording for what those are. But no, it would be the same for everybody. All right, some CPE questions. HOAs, are they required to file? There is some information on the FinCEN website as to whether homeowner associations are required to file. It depends on the unique situation. So I would need more information to answer your question, but for the purposes of this call, I would direct you to go directly to fincen.gov, and they'll be able to answer that directly in the FAQs There's a lot of published information about that. It's a great trove of information, whether you're part of an HOA or any other type of organization. I would point you there. If you submit a BOI report with the FinCEN ID, will the report show the owner's applicant's information on the report when you look up the entity? I'm going to be honest, I don't know the answer to that question in terms of what the database would show. Typically, when we do the filing, the output, there is a confirmation that the entity gets after it submits its report. It will have exactly what gets submitted. So if we're doing a report with an individual's FinCEN ID, it would have the name and the ID, not the underlying data behind the ID itself, if that makes sense. I am reasonably confident that the government itself could look up that information, but it is not public. In no case am I aware of a passport scan or something being available to the general public. FinCEN does not publicize that for obvious reasons. Information about a church, I would again point you in the direction of the guidance for nonprofit and tax exempt entities. I mean, churches have their own classification with the IRS themselves. So I would point you there. Do you have to file anything to claim your exemption? Not unless you've previously reported. No. Owners of the LLC are irrevocable trusts. Do you put the beneficiaries of the trusts? Again, we're talking about natural persons, right? So a trust is not a natural person, but there certainly would be trustees, beneficiaries, et cetera, that may need to be reported. And for that, I would refer you specifically to the FinCEN small business guide. There will be a number of scenarios for calculating the ownership and the people that would need to be reported for that. Specific to your situation, if that is not enough information, I would encourage you to speak with your attorney on that. Wow, questions are still rolling in, so I want to thank everybody for your attention and your engagement on this. This is great. All right, so does a manager that is not an owner of an LLC need to be reported? This is a great question, so thank you, Gladys, for that. Remember, LLCs, the owners are the members, and they may appoint a manager to run the affairs of the entity. That is not the same definition as a beneficial owner. A beneficial owner is a person who either has more than 25% direct or indirect stake in the entity or exercises substantial control. And so if there's not direct or indirect ownership, if that manager does not have direct or indirect ownership, it very well may be an individual with substantial control. That's general information, right? So for your situation, you'd have to look at the definition that I had on the screen. You may need to speak with your attorney if you're not certain, but it certainly is possible that a manager of an LLC would need to be reported. Here's another question. I'm a sole proprietor who created a disregarded LLC and I contract only with nonprofit organizations. Do I need to file? This requirement does not matter who your clients are. Typically, it's most legal entities. So you have an LLC, you have a corporation, some of the other types of entities, generally speaking, unless it meets the exemption requirements, it should expect to file. Okay, wouldn't it be easier for the companies that filed the initial LLCs to have a direct link to FinCEN to transmit this information to them? And since any changes a business owner makes goes back to these companies, therefore the updates can also be transmitted to them directly without the business owners having to do anything extra. Yeah, it would be. We set up entities all the time, and that's how we do it. So if we're working with a client who's setting up an LLC, absolutely makes sense. We collect all the information end to end and submit those reports. Makes it a lot easier. So thank you for Sandra for letting me get a little bit of a pitch in there, but you're exactly right. We can really solve a lot of that complexity. So at this point, we are at the hour mark. I want to thank everybody for your great questions, your attention. You're welcome, Jeremiah. Thank you for all of the great questions. As I said, it's been a pleasure to be here. And at this point, I'll turn it back to Zach and the Earmark team, and hope everyone has a great rest of your day.
Yeah, great. Thanks, James. That was a fantastic presentation. And here's a video, everyone, just reminding you on how you can earn your CPE for attending this webinar.
Today's webinar has ended. We hope you enjoyed it. To earn CPE for watching, download the free Earmark app. Scan the QR code on the screen to visit the download page. Open the app and create your account. Use a valid email address where you will receive CPE certificates. Then register for the course. You can search for it by tapping on the magnifying glass icon on the home screen and then entering the name of this webinar. If you're attending the live stream of this webinar, keep an eye out for an email letting you know when the quiz is available in the next few days. Pass the quiz to earn your CPE credits. Then tap the button to email yourself a CPE certificate. Stay tuned for more webinars from Earmark. We appreciate you joining us today, and we look forward to seeing you again soon.